The OneAcademy is the heart of our company. Cryptocurrency is not an easy product. It's a very innovative product based on technology and based on very, very complex concepts. For us to be part of this financial revolution, to be part of cryptocurrency and of a community, we need to understand exactly what we do and what we talk about. And this is why we have the OneAcademy. The OneAcademy provides you with concepts, provides you with explanation on cryptocurrency and on the financial world. I would encourage everybody to join the courses, to do the certificates, and to understand thoroughly how to use cryptocurrency, what cryptocurrency is, and how we can change the world by using cryptocurrency. OneAcademy. Learn today, lead tomorrow.
Pleasant evening to one and all tuning in from Internet Land. I am your host for this evening's call. My name is OneAcademy, and it is my pleasure and privilege to welcome you to our OneAcademy Nights, where the K stands for knowledge. And of course, we have a treat for you this evening. Those of you who are tuning into our call live via the Zoom link, and of course, the other persons who will be viewing on Facebook and YouTube. We have a panel discussion this evening surrounding investment and insurance. So it's my pleasure and privilege to turn you over to our co-host and our diamond leaders this evening to take you into the introduction of our content. None other than our own Ivan and Michelle Mark, the diamond couple. Ivan.
Awesome, Mr. Kiddies. Thank you so much for that lovely introduction. And of course, we are here at the OneAcademy Nights, and you said it, where the K stands for knowledge, because it makes no sense you trying to get some information and you don't have the knowledge to deal with it, or things are changing and you don't have the knowledge to deal with it. So welcome each and every one of you from all over the world. Good morning, good evening, good night, as we love to say, because this, of course, is an international call. And we hope that we add value to you, not just value, but tremendous value to you. Tonight, of course, we have somebody special. We have our guest speaker, and we are dealing with the OneAcademy manuals, the instruction manuals. As Muriel Azama said, this is really weapons of mass instructions. And we do it in a simplified version. It's very simple, so the average person could understand it, but the average person could also take it and utilize it, and that is key. So tonight we have our resident, I should say, mutual fund agent who has many, many years of experience in the field of investing. And if you go to the OneAcademy manuals, you will see that they give a lot of information on what is happening currently, what happened before, what is happening currently, and what you can do. And of course, investments are one of the things that they highlighted, and we would like to enter into that realm tonight. So before we go any further, Michelle will introduce this special person by, of course, reading his bio. So Michelle?
All right. So I have the privilege of giving some information on our no other person than Mr. Michael Redhead. First of all, he's married to Carol Messiah Redhead, children Cyrone, Remington, and Roland, all directors in the family businesses. Redhead Pensurance Services Limited, Unitrust Agency, and Pensurance Brokers Limited, Insurance Brokerage. He has been educated at the Presentation College and also the University of Mona. A-level economics teacher at the same Presentation College in 1973. Insurance he has been in since 1980, and in the unit trust with mutual funds and so on since 1984. His office is at the Tropical Plaza in Pointe-à-Pierre, and he has certain plans. Promo plans: Plan A, building wealth and investing. Plan B, backup arrangements with insurance. I love it. I love it. I love it. I want to welcome Mr. Redhead.
Big round of applause.
I believe it is
to Mr.
fitting.
Michael Redhead.
And I would just like to also add, he's part of our One Life community as well.
Which is
which
another
is
round of
One
applause.
Academy. So I want to thank
Academy.
you. So with that, we are going to go ahead. Ivan is going to take it how it's going to go.
Yes.
Yeah?
So what we'll do, because last week we had a special session where we highlighted this new Bretton Woods agreement that is coming, Bretton Woods 2.0, and many things are changing. In fact, the whole financial system as we know it is going through such a rapid and tumultuous, switch. It is tremendous what is happening in the financial world. You can't take it in all at once. So with that, I always like to really add some content to what we're going to speak about, and in the form of a video by Ray Dalio. So if you permit me to share my screen before we bring on Mr. Redmond, please. Redhead, sorry. So let me share my screen. Before I do that, I would like to really highlight the OneAcademy manual. And this, of course, is in the second module, level 2. And it has here what a mutual fund is. And by definition, people say, okay, because our speaker represents one of the largest mutual funds that we have in Trinidad and Tobago. And many times people misinterpret exactly what a mutual fund is. A mutual fund is an institution. So UTC, which is the Unit Trust Corporation of Trinidad and Tobago, is the mutual fund. And it offers a relatively inexpensive way of investing into the stock market. So what this does is actually gives you the ability to trade many stocks at the same point in time. So mutual funds trade on your behalf with a wide portfolio of stocks. In doing so, they spread the risk between all people who have entrusted their money to the fund. So what they do is pool, of course, all this money and invest on behalf of the average person. It is a cheap way of anyone getting into this realm of investing on the stock exchange. All right, so this here is actually page 14 of the level 2 OneAcademy manuals. All right, so if you look here today, what we saw today is that the Dow Jones hit a record high of 30,000 today. And this says a lot, because with all the stimulus packages that the feds and so forth are offering, you are seeing that most of this money is actually going into the stock market in order to prop stocks and keep them at a certain level. Of course, who stands to benefit from this more than anything are actually the companies and the shareholders that have these stocks, because it is not really what is real. It is artificially propped through the stimulus packages that the government is doing. So let's hear what Ray Dalio has to say about this whole financial world order that is existing and the new one that is coming on stream. So we'll just listen to just a couple minutes and we would hear exactly what he's saying.
So we had to buy 60,000 computers for kids who didn't have computers and they don't have connectivity, okay? But there's so many, there's poverty, there's food as an issue in that kind of environment. So it's not an environment of equal opportunity. Now, why does that exist? And there are not bad people who are producing it, but the profit system is not good enough to be able to allocate resources that way. In other words, not everything's going to be able to be achieved by profit. For example, profit pursuit is logically, and for the efficiency of the whole system, going to replace people and jobs. And so it contributes to the wealth gap it's smart for a company to have a technology that's going to replace people and jobs, but you get to a smaller and smaller percentage of the population that makes that technology and benefits it, and it produces that wider wealth gap. So that wider wealth gap also is an unjust system. What I found is that the top 40%, because I broke it into quintiles, top 20, each 20, and top 40% of the population on average spends 5 times as much money on their children's education than those in the bottom 60%. In other words, the majority of people has this, the elites spending 5 times as much money on their kids' education. The elites and the people below want to take good care of their kids. They're not doing a bad thing, but that perpetuates an opportunity gap. So those structural reasons, not any bad guys, but those structural reasons are leading to a result that I don't think, that is either fair or that we want, because we're not tapping that talent. And it could lead to a civil war or, some kind of revolution of sorts. So it has to be dealt with.
And you have to wonder too how the states are faring through the pandemic too, when you're thinking about just the public education system and funding those things. How do you think that kind of exacerbates the problem, and what should be done? Do we need more government to step in here? Do we need the private sector to step up? Do we need more philanthropists to adopt the local public schools? What do you think needs to change?
Before I get to what I think to change, I want to build on your point of what is. And what is in a lot of places, and it's ironic, in the richest states, they have the most debt and they have the largest wealth gaps. So this is true not only in Connecticut, New York, New Jersey, Illinois, and a number of places. And that produces a dynamic that has been, everybody sees it's true over time. You can't raise taxes because people will leave and too much a burden. And you can't lower spending because it's inhumane for those other people. And when you have a large debt and you have a large wealth gap and you have a downturn, you have a conflict. You've got a real problem. The United States as a whole has that issue, but the Federal Reserve bridges the gap by buying the money, but printing the money and buying that gap, buying that debt. I think at the end of the day, the question will have to arise, will they have to do it? How will that question be dealt with? Because it, at the state level or the local level, because it exemplifies what happens when the debt can't be purchased. And then, so I think we're in an era of a lot of monetization. Unfortunately, these all reach a point where it's an intolerable crisis. And then extraordinary measures come. And so I think that the path will look something like that.
So what does that mean for my generation? I'm a millennial. My generation, I guess we're becoming the parents of today, and younger generations, we're going to be the ones that have to really deal with the consequences here. What do you think the world looks like that we ultimately inherit?
Well, again, I think you have to be savvy of what that whole cycle is like. That's one of the reasons I wrote that LinkedIn piece. So the changing world order on LinkedIn, if you see it, because otherwise you'll be surprised by it, I think. But I would say when you're looking at that, it comes back to the same fundamentals. Educate your children well. Teach them self-discipline, character, civility, those things, to be strong. Teach them then to be open-minded, to go to read history or to hear from other people. Teach them to be strong. Those are the things that you can give. And yeah, don't be naive. Don't be blind to think that just the experiences that you've had are all you need. The future will be very different than your past because of the way these things go in cycles. The funny thing, I think most everybody expects the future to be a modified version of the present. or what they've recently experienced. And more often than not, it's more the opposite than similar. In fact, if you take every decade, the 1920s, the 30s were the opposite. 1930s, the 40s were the opposite, more opposite than similar. And you take every decade and it's more opposites than similar. So open the mind to that. Strong character, well-educated. Those are the things at the end of the day that will serve you well.
Mm-hmm. You know, I just want to read something that you wrote because it stayed with me. You said, quote, "We're like ants preoccupied with our jobs of carrying crumbs in our minuscule lifetimes instead of having broader perspectives of big picture patterns and cycles, the important interrelated things driving them and where we are within the cycles and what's likely to transpire." And of course, I think later in the piece, you even said that you're even just beginning to put together the crumbs, the picture here, and you don't have all the answers, of course, and no one really does. But I guess kind of to round it out here, what do you say? I guess you were kind of outlining what our world might look like, but if you could narrow it down to one thing, what would be the biggest issue that we need to tackle first?
Well, of course, the biggest issue goes back to one's approach to life. It depends at what level you want me to answer the question, but the biggest issue is be radically open-minded. You have to make your own decisions, and you have to make them well by taking in well, not by being closed-minded, and having the character to do it, and then going back and understanding histories and how the patterns of histories, and then take in from the people around you, the smartest people you know, the information and triangulate with them well to make that decision. That is, I would say, the overarching at any time, the most important things anybody could do. As for now, I would say to realize that these changes, take a global view, make comparisons of countries, put things in perspective. And then if I narrow down to investing, so I'm getting more specific in answering your question, it would be first to realize that cash is not a safe investment. It's a very risky investment, and know how to diversify well. And when I mean diversify well, I mean diversify globally, in countries, in markets, and in currencies.
Mm-hmm. How about, do you have a take on digital currencies? This is something a lot of young people talk about. Any view on that?
Digital currencies, let me break them down into two types. There's the type in which it's like a Bitcoin type of currency that'll be an alternative currency in terms of its supply, demand, and an alternative storehold of wealth. And then there's digital currencies. That means there'll be other types of currencies, let's say the dollar or the euro or the Chinese renminbi, that is digitalized. Okay, I think we're going to see a lot more of that second type, but I think that there are three main problems of the first type, the Bitcoin type of that. Theoretically, it's good, but the three basic things are a currency has to be an effective medium of exchange, storehold of wealth, and the governments want to control it. So I today can't take my Bitcoin yet and go buy things easily with it. And as a storehold of wealth, it's so volatile that its volatility based on speculation is so much greater that it's not an effective storehold of wealth, and which is also one of the reasons it's a problem to be a transaction vehicle, because if a vendor says I'm going to get paid in Bitcoin and they don't know what that means in terms of their other liabilities, that's a problem. And then thirdly, governments won't, and if it becomes material, governments won't allow it. I mean, they'll outlaw it, and they'll use whatever teeth they have to enforce that. They would say, okay, you can't transact in Bitcoin, you can't have a Bitcoin. So then you have to sort of be almost like, is it a felony? And I'm going to have to be a felon in order to transact. They outlawed gold What's wrong with gold? But gold was a storehold of wealth. And so if I was to say, what would I prefer, Bitcoin to gold? No, I wouldn't prefer Bitcoin to gold. Gold is will be the vehicle. There's either that central banks and countries use as an alternative to the regular cash, because each central bank can print cash. But through time, when countries dealt with each other, they used gold because they didn't have to worry about being devalued by some country that's going to print the gold. And so it still is our third largest reserves if you take central bank reserves. The largest is the dollar, the second largest is euros, and the third largest is gold. So, so if I'm dealing with classic currencies, I'm really sort of getting into the storehold of wealth domain. That also includes stocks in that storehold of wealth. But I don't think digital currencies will succeed in the way people hope they would for those reasons.
All right. So that was just a small snippet of what Mr. Ray Dalio, and he is known as one of the, next to Warren Buffett, of course, one of the most successful investors that there is. And those are just some of his thoughts. So I wanted to start our discussion on the backdrop of what Mr. Dalio has actually said. And some of the key points, of course, he said coming down to the end of his video. We didn't play the whole thing. But he said that the top 20 of the rich people make sure that they spend at least 5 times more than we do on our children's education. So they are highly educated. They make sure that their generation, the generation that is coming after them, is even more educated than they are, right? The future will be very different to the past. So it is not that the future will be something that sort of encompasses the past, but it will be very different. And he, of course, made reference to 1930 being different to 1920, 1940 being different to 1930, and so on. And also, cash is not a safe investment, right? Which is maybe one of the most potent points that he made. He isn't by himself in that whole line of thinking that cash is not a safe investment. Our topic today was really, is cash still king? And really and truly, we needed someone who is in the investment arena to really give us their perspective on that, because again, before Mr. Redhead actually starts, again, we have to always be really cognizant of the fact that this thing called the US debt, it is tremendous. It is basically going up by trillions of dollars every single day. Let me see if I get. All right. So just a couple weeks ago, this here was about 26 trillion. It is now $27 trillion. So you see that this debt clock continues to march forward in leaps and bounds because of the stimulus package. And we all know that a lot of this stimulus money is going towards the stock exchange to boost stocks, to keep stocks and the value of companies at a certain level. And the only group of people that really benefits from this, of course, are the owners and the people who have the stock, because they would sell it at that price, and they get a cheap way of actually borrowing money from the feds. All right, so this here is tremendous, and this tells a whole story if you know exactly what to look for. So with that, I ask and I introduce Mr. Michael Redhead to, so you can unmute your mic, please, and let's start our discussion on investing in COVID and some of the things that you may have seen that is totally different to what you knew from before, and what could we expect as just normal people who want to make some investments. Do you agree with that statement that cash is dead?
Yeah. Well, folks, nice chatting with you. We got quite a mouthful there from Ray Dalio. Basically, he arrived at we must be radically open-minded. Now, all of these things going on around us in the global scene, it is quite confusing to many people. It's way above the level of many of us. The printing of money, what will happen to the US dollar, the rise of China, the rise of the Chinese currency becoming a reserve currency, the sinking of the petrodollar, and all these things, and what will ultimately happen to the US dollar. You know, we all sit here and we sort of comfortable that, you know, that's the area, you know, we try to earn or we try to get US dollars. We try to have as much cash as we can, and we think we are getting somewhere. Only today I was telling someone in my office that there are a number of people in Trinidad, well-off people, right? And not, before I go to the ordinary people, many well-off people, particularly older women whose husbands had good businesses and left them $2-3 million to live on. And they, up to a few years ago, were getting 10 and 12%, 10-12% on their couple $1 million. And they sat at home and with their nice cars and their houses and their maids and whatnot. And they got so many $1,000 every month, purely out of interest. And they rested and they were comfortable. Over the last few years, our money market funds have stopped getting 10 and 12 and 8 and 6 and 5 and 4 and 3 and 2, and now it's 1%, and some even less than 1%. So all of these people who are comfortable and resting and depending on that cash through the rate of interest have found themselves in a position where they're not getting that money. They're scared. They know they are eating out the principal. They don't know how long they live. They're afraid to spend any money, and they are in a terrific situation. And they have never been accustomed to investing. Now that we have the pandemic, over the last, since March, well, since the year began, since things turned on and we had that shutdown in March, there are a whole number of people who were not really attentive to their finances, who have found themselves in a position where they are suffering and hand to mouth. For years, we have been trying to tell people, spend less than you earn, make sure you save some money, make sure you build up emergency funds, make sure you have 6 months income in reserve. And a number of people haven't done that, right? Many times over the years, I have sat with interviews with people, and we sat down and worked out, you know, you work for 100,000 a year over the last so many years, you work for a couple $1 million. How much do you have of it saved or invested? And some of them can't even tell you $20,000 or $10,000. So all of these people who have not paid attention to that sort of thing have been entirely caught off guard in 2020. And they sit now with hand to mouth. The government, well, many people think it's the government's role in a sense to help out a number of these people, disadvantaged people. And the government, of course, has the problem of less taxes and more mouths to feed. And on top of that, there are a number of people who are not in the net. They're not in NIS. They're in small businesses that are not registered. So they can't even qualify to get government help. Or a whole lot of these people. As a matter of fact, right around the world, there are a whole lot of people who heard it that the largest amounts of foreign exchange movement in the world is not oil money, it is remittances. People from the third world countries who go to the first world countries, if you call it that, and work and send home money. And that's the largest amount of money that circulates, remittances. There are a whole lot of people who are outside of the banking system. A whole lot of people who cannot open an account. There are many people right here in Trinidad now who cannot open a bank account, who are getting trouble to open a unit trust account too. Because they don't have proper IDs, they don't have proof of address, they can't get a job letter. And a lot of these people are outside of the system. I imagine that is why many of them might also be attracted to different types of susus, some good and some not good. But as Ray Dalio was saying, you know, we have to educate ourselves and our children to take in this reality and get something going, right? I remember once, years ago, when I just got into insurance, probably in the early 1980s, I went to a convention in Jamaica. And an old chap, Lazarus, sat down with me for breakfast in the grill one morning. And he said there are two types of people. One type own landowners, and the other type rent. One set of people produce, another set consume. One set live off the next set, and one set complain all the time. He said, stop complaining and change sides. And that is what I tell people every day. Stop complaining and change sides. Assess yourself, see where you are. Are you producing or are you consuming? Are you investing or are you just spending your money on consumer goods? Do you distinguish between saving and investment? What are you doing? You know, you must know what you're doing, right? What are the words that Dalio used? Be radically open-minded, educate yourself, embrace reality and deal with it. If you crash, get up and keep going again. Think for yourself. All of these things Ray Dalio just told us. You pursue your dreams. Know your goals and go after them, right? So that's what we are trying to teach people. That is what OneAcademy is trying to teach us. Take care of our situation and go at it. Cash, being in cash is really risky business, as he says, right? Cash doesn't earn anything. As a matter of fact, I tell people, there are a whole lot of people who don't know what to do with their money. And they put it in the bank. Interest is the trickle that the bank pays you to use your money. And if you don't have anything better to do with your money, put it in the bank and take your 1%. That's what happened to all these old ladies I was talking about, who have millions of dollars and they got 10% and now they're getting 1%. They put their money in the bank. They don't know how to use it. So many of us don't know what to do with our money. They put it in the bank and they pay you 1%. And what do they do with it? They lend it to people who know what to do with money. People who know that you must invest other people's money. And they would have their businesses and their manufacturing firms and build their buildings and collect rents and all these things. And we turn around and call them the 1%. Many of us are upset about the 1%. But they know what to do with money. They took Dr. Rowley for task for something he said a few weeks ago about money going to the people who would invest it. Right. When money goes to the poorer people, which you have to do because they have to live and the government has responsibility, they spend it on consumer goods. But when the money goes to the richer people, they invest that money to which produces jobs for the same poorer people. So the system has to work that way. So what we are saying, and our education system doesn't, they don't teach you in school how to save and how to invest and what to invest in, right? I often tell people, you eat in KFC all the time. Do you have any shares in Prestige Holdings? No. You're shopping at Massey, do you have shares in Massey? No. You're shopping at Standards, these places, do you have shares in Ansem Macau? No. You smoking, do you have shares in Western and Tobacco? Well, What are you doing? You're making other people rich, and you're not giving yourself a chance to make something too on the very things that you spend. So don't just save, you must invest. The credit unions and all of that, they have taught us how to save. The SUSUs have taught us how to save. Now we must invest. That is where the unit trust comes in. Many of us, I imagine, might remember moving the Sousa long time ago, since the 1980s. Moved the Swerve, they used to call him, I believe. And he was the one who, he was the top actuary in the Caribbean. And he introduced something called Ventigrowth to Maritime Life, which was an investment thing in stocks, which was a precursor to the mutual fund in Trinidad. And I guess because of the success of that plan, he was called by the government to introduce the unit trust. So a number of, that's what a mutual fund is, right? A number of ordinary, simple people put their money together to have a fund that has some meaning, get some clout in the market, put their money together to become a big player in the market and to make some waves in order to try to make some good returns for the group of people in the fund. So the unit trust gives an opportunity to everybody to get into this big fund. You can get into the unit trust for $100, $100. You can start your investment. You can deposit something like $20 at a time into your account, and it goes into this big fund. So you have a big fund, you hire some bright people to manage the fund who are the investment managers. You give them some rules. Well, you don't put more than 10% of the fund in one investment. You don't put more than 10% of your money in any one thing. You distribute 90-something% of the earnings to the unit holders every year. You are limited to 3 to 5% of what you earn to run the organization, and you give them some rules, and you put them to run it, some bright people. And that is what the unit trust does. Right? The flagship fund, which is called the Growth and Income, which was formerly called the first scheme, you put about 60% of the money is in a basket of shares. Another 20-something% is in government bonds, and the rest is in shorter term instruments. So you get a nice mix. Right? One of the basic rules of investment, when you start doing your early investment courses as an individual, is to divide up your money in between 10 different stocks in 3 different industries in order to get a decent spread. And there are many individuals, even well-to-do individuals, who don't have their money so widely spread. A large number of people in Trinidad have mostly bank stocks. They have many of one type of stocks. They aren't sufficiently diversified. As an individual, even if you have 50,000 to invest, you might still feel funny to go to the stockbroker to tell them divide this 15,000 between 20 different stocks. Right? But the unit trust is what gives you that platform, that forum. Your $100 from your $100 is already divided among a whole number of stocks and bonds and short-term in one package. And you look at the annualized return, you see the price at which you came in, and you can easily find out day to day by simply looking at the papers or the computer and the value of your unit. So every day you can know the value of your investment. So if you're eating KFC, you have some stocks in KFC. If you're buying a standard Massey, you have a share in that. You have a share in the wealth producing sector, so that you're not just a spender, you're not just a person who has money there doing nothing, you have a chance. That is what the unit trust gives you. a chance to take part in the growth areas of the economy, a chance to identify with some areas that make money, a chance to learn what to do with your money instead of just sitting and having it in the bank. It gives you an opportunity to do something. And the next step is, of course, once you observe how the unit price is working, right? The system, it's a sort of cycle, right? The prices go up and down. When the prices of stocks go up, people are happy. And when it gets sort of high, they say, well, look, man, this price is high. It's time for me to sell and take my profit. And they begin to sell. When more people are selling and buying, the price, it makes the price go down. As the price go down, more people are selling because the price is going down. But when it reaches a certain level, people begin to say, look, this thing is looking attractive again, it will go up. So they start buying. And as they start buying, more people start buying, the price goes up again, and you go into another rise. So there's a constant rise and fall. So in a fund like that, you have a chance to make a bumper every time the market goes over. You have a chance to make some profit. Whereas if you depend on interest and cash on interest, once the thing goes level, you don't make any money. You need a system that goes up and down, that fluctuates to allow you to make money. So you come in when it's low, you go out when it's high, or you depend on the rise and fall over time. That is what unit trust represents. And once you recognize that it's going up, you can look at your weekly stock report if you want. On every Sunday, all the papers have the record of the stock movements in the week. And you can see the ones that are going up. Those are the ones that are pulling up the unit trust price. Those are the ones that are pulling up the economy. Those are the ones you go and buy some of individually. Right? So you have your basket there in the unit trust. And you start to buy some individually on the outside of the ones that are going up, right? That is more like the gambling part of it, right? You know, you're buying shares, more risky individual shares, but you have your base there in the unit trust. And diversifying means that, you know, there are so many other areas. I am brave. I buy any sort of cryptocurrencies or anything, so right? I missed out on Bitcoin big time because I saw it years ago. And since I missed out on Bitcoin when it was only a few dollars, and now Bitcoin is $19,000 today. And I looked at it and I said, what if I had bought a few Bitcoins 15 years ago? You must not miss out on everything. You must take a chance at something, meaning that you must have a base which is fairly secure. And on top of that, you can take a risk. Okay? One thing again, I always tell people, there's only one fund in the world that allows you to buy stocks and bonds and have a guarantee on your money. Right? Once the unit trust saw since about 1980 something that the cycle was about 3 years, right? They fixed it, right? When you invest to make a profit. So you should come in low and you're anticipating that it'll go high for you to make a profit, right? When you want to sell, you know, if you need your money to do a house or whatever it is, try to pick the high time to take it out. Don't pick the low time when you make a loss, right? It needs to go up and down because every time it goes up and down, you have a chance to come in, make a profit, sell, come in low, it rises, you make a profit, you make sure you sell at that time, and when it's low, you make sure you buy again. So you always buy more when it's low, right? So if you come in, that's what you should do, sell when it's high. If it goes down again, and you find yourself maybe for emergencies having to sell when it's low, and you make a loss, once 3 years have gone, the unit trust will pay you the difference. That's the price guarantee. They pay you the difference so you cannot lose. They pay you the difference between what you paid for it and the selling price, which is lower, once 3 years have gone. That's the only fund in the world that gives you a guarantee on something with stocks. And we have it here in Trinidad. And if there are more than 600,000 unit holders, almost the whole labor force, right? And you're not one, something is wrong with you. You see, many people have benefited over the years. and many people more will benefit, right? But you must be you must be active and decide, look, I must not fall into the category of those who do not know what to do with my money and put it sitting in the bank or put it for other people to use, right? Let me get involved and have it invested. Trinidad provides you with that fund and go. And once you're in that, you begin to change your attitude to risk and you get braver. And then you could go to stock exchanges all over the world, right? New York Exchange doing good now. Plug Power, 22nd Century, all these things going up, right? 22nd Century. About 2 weeks ago, 80 cents is 170 today. You see? So, you have to raise your risk profile and become braver. So the unit trust is our start for you Trinidadians. And as you learn to do it, you get braver. And that's how we tackle it. In time to come, whether it's the US dollar, whether it is OneCoin, whether it is Bitcoin, whatever, you will have some. You will diversify. Yours, Ivan. Go ahead.
Wow.
Ivan.
Wow, that was a mouthful.
Oh, that was more than we bargained for.
Wow, 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 wow. I am so sorry that most of our local IMAs are not on this call, but don't worry, there is a recording. I am really happy. You said so much, Mr. Redhead. The thing about it is I'm an ex-banker, and I used to get myself in trouble for selling your product, unit trust, because I understood. You see that fund that you talk about, the guarantee after the 3 years? That was like a super thing because you could purchase now. And what you're saying, after the 3 years, I am guaranteed to get it at what I purchase it at. However, if it should go higher, well, it will work with interest and so on. I understood
Michelle,
that. And you know what
Michelle,
I love? Mm-hmm.
the reason why you invest is to make a profit, huh? Not to get a price guarantee and get back the same thing. You invest to make a profit.
I understand.
If you
And
fail to make a profit,
I understand
if you
that.
fail to make a profit, then you can get back your money.
You get it. And that's it.
Incidentally, you would have got
I am
dividends along the way, huh?
Of
You would
course,
have
and
got
that's
dividends.
why I seek my clients' interests because for sure they are in a better position as compared to other products or other things that they are doing. And I love that. What I like about the Unit Trust Corporation is that there are no fees attached to the
Right.
accounts, at least to maintain the account. So if I leave my money in the bank, I'm sure if I leave $100 in unit trust, it's going to grow. Actually, I left cents and my account never closed and I got interest on it. So people need to understand a little bit more. That's just one, as you said it, I love your advice as to the 10 different portfolios about having your things in different and in 3 different industries. So people need to understand, and that's why we were as we are also in finance, and you are in the investment part of finance. I may be in a little bit with the insurance and stuff and banking, but the thing about it is we always look for ways to add value and for help people to diversify in different portfolios that will benefit them. And you said so much there, so much that I am sure that the members who are on this call not aware that it exists in Trinidad and Tobago and that certain things. So this is just one aspect. But here you are also saying that's why you went into cryptocurrencies. That's why you came into OneAcademy, One Life, because you are understanding that not one will suit the goals or the aspirations or achieve everything. And I like that. One other thing you said, you brought up Mr. Rowley's, I'm sorry to call his name, but the Prime Minister,
He and I
information
studied
when he
together.
said about, yeah, when he said, let the rich get richer so they could help the poor. That's a statement that everybody was really really kind of little funny about it. They're a little funny about it. But you know what? I know a saying is it is better to teach a man to fish. Not just about letting other people think. It's better I educate. You said that the people lack education, the regular man. The regular man lack education. And
need that
here
money.
we have OneAcademy, the business that we are in. We are actually educating the normal man where they can make a better decision. Not be rich, whereas some can't be rich. You understand? Because if they knew what you knew about Bitcoin and they got involved years ago, they are wealthy today. If they got involved in some other crypto, I remember 2016 when we came into the business, when we came into the knowledge of cryptocurrency, guess what was the price of Bitcoin? 650,000, 650 US. And I saw it go to 20,000
$.
and I didn't get involved because I didn't understand and I thought it wouldn't go higher. To my surprise, it did, but it came back
And so
down.
it
And
come
you
back
are,
down to 9 a few months ago.
yeah, and
It
then
came
it
back
came
down to
back
9
down.
May or June, and now it's 19 again.
Yes, and then it's 19 again, exactly. So what you just said about going down and going up, and you know, you have your different avenues. I think we're in the right field. We in the right place at the right time. And I'm happy to have someone like you who could give advice to the community, who could be part of our community to say and give us validity as to why we in this business and
So
why we
you
need to.
start
Yeah,
off there. So
you start
we
me
have a
off.
panel. We have a
Yeah,
panelist. So if I let Michelle, she
I
will
will
just
go
go on.
on
She will
because
just
you
go on.
said so much things there.
So we have this panelists here that have some very good questions. Before I take them, I also want to show, because you mentioned cryptocurrencies, and let's look at the gain of Bitcoin. You said in 2012, right? And if you look at the gain here of Bitcoin, it was 9 million. That's right, 9 million when compared to a lot of the other stocks, percent for the past 10 years. Now imagine you would, if you understood where this was going, what would have taken place. And just like you in 2012, I saw it. There wasn't much information about it. I didn't have the money to say, I didn't know how to get involved. It was only minors at that point in time. I didn't have the technical experience. So again, education was lacking for me to understand what was taking place. But look at this as an investment tool. Now, this here wasn't really created for this speculation that is happening, but it's happened. And it was really created as a peer-to-peer system, but we cannot deny that. So there are other coins, of course, that are on the horizon right now that one could really take part, because you may not be able to buy Bitcoin right now, but there are other things that are happening that will also give you that return. So I thought I just should highlight that as you mentioned the cryptocurrency scenario, right? So
Ivan,
as we have,
in
uh-huh.
2017, when I happened to hear about a OneCon meeting, nobody invited me. I jumped in my car and I went. And I joined. I just put about a little 10,000. I don't mind putting 10 or 20,000 as in anything. Right? I could lose that if it's anything. Good? But I put my little 10,000 and the OneCon was worth 7.5 not euros. And now it's worth 42 euros. 42 each one.
Each one. Each
I
one.
waited to do something with it.
So all
We're
right, so
calling you.
let's take some of the questions, please. Dwayne Kiddies, I saw that you have questions, you and Alvin. So you can go ahead,
Yes,
sir.
Ivan. Yes. And folks, we promise you a treat this evening. And most definitely, you're having a treat. Sir, definitely, Mr. Redhead, you need to be here to do a part 2, 3, and 4 because the amount of nuggets that you drop. So, moving right along, one of the first questions that I asked, because I am now interested in acquiring NGL stocks, and I was doing some background checking to try and see how I could get registered. And understanding now that I can go through UTC, your organization, to secure those shares instead of having to go to one of the private stockbrokers where the minimum requirement is a $25,000 investment, and I have to pre-qualify by providing my job letter, pay slip, evidence of funds, IDs, and the likes. So if you could shed some light on that for us, if we can be able to secure those shares and other shares that might be traded on the Trinidad Stock Exchange.
Dwayne, your money in the UTC, your $100 or your $1,000 or your $100,000, once it is in, it has already purchased that basket of shares and bonds, right? So you don't identify that you're buying NGC or you're buying Prestige or whatever, right? You have the mixture. Like I said, the fund at the moment has just under about 60% in stocks and about 20-some% in bonds, and the rest in short-term things, money waiting to go in trading and all that, right? But you have an automatic mixture of all these things to give a balance to spread your risk. Right? So the UTC spreads your risk, so you could sleep. You could sleep, and you don't have to worry about anything. And if the market goes down, it will come back up. And if you have to sell when it's down and make a loss, they will pay you back your money to break
Yes,
even.
I saw that.
Right?
I saw that. I know
outside
that the
of that, outside of that, buying individual stocks, you do have to go to a stockbroker, right? So you have your stockbroker outside of that in order to buy individual shares and take your higher level of risk with the individual shares. But you grow to that.
And really, KDs, the Trinidad stock market is one of the most stable stock markets in the world.
That was one of my first questions. If it is that we are to be careful of the Trinidad stock market being overinflated, like what we see in the NIS and the Nasdaq, where we know that a lot of fiat currency is pumped into those markets to make the stocks look good.
We have a small economy and a small stock market, right? Then between the pension funds and the insurance companies and the NIB and the UTC and these organizations hold most of the stocks, right? If you are a credit union and you have a nice little basket of stocks, and for some reason you want to sell it out, you will stay with your cash. You're not getting them to buy back. So they're not letting go of their shares, you see? So the system is stable. And where are these companies going? Where's Massey going? Where's Answer going? These are good, stable companies. You don't have to worry.
Right here.
You don't have to worry. Good, stable companies.
I know Mr. Morton had a question. I don't want to hog the few seconds that we have left. Alvin, can you unmute your mic and ask your question?
Pleasant good evening to the Diamond and Michelle, and to my fellow panelists. Mr. Redhead, thank you very much for sharing the little that you shared in all of the mouthful that you gave us. I was wondering, what are the returns currently from UTC? Because I was enthralled by your discussion, and it was interesting to learn. And yes, most of us would know that the banks were at one point giving 10% and so on. And I guess by virtue of what has happened generally, they've now gotten down to 1%. They've reduced the spread there to the depositors, but they have ensured that they have not lost out by lending it out at much higher rates. What are the current returns for UTC?
That growth fund for 2019 ended the year at about 9.8 or something like that, right? This year, it won't be anything like that because it grew up to March. From March, it went down probably nearly $2. But from April, it sort of leveled off. Well, as a matter of fact, for the last couple of weeks, it has got up to higher than it was for the year so far. So we might still end up the year at a good figure, right? But this year, this is a special year for everybody, right, with the pandemic. It's a special year for everybody. And in a year like this, things will go down. What you have to make sure and do, now that the price has gone down between March and November, you have to get in because it has already turned up, right? The price today was higher than anything for the year so far. It has turned up. So you get in there now and you getting some money because the price has turned up. That's what you have to do. Sit and wait, and when the price turns up, or you do what is called dollar cost averaging, you put in some every month, so your price will move, your average price will move up as the price of the unit goes up, Once you buy at a higher price than last time, your average price goes up. And if it's going down, you buy at lower price than last time, your average price goes down. Good. So now is a very good opportunity. Yeah.
And what would be your recommendation between what used to be called the first scheme and the second scheme?
The second scheme is not investment, right? That is a short-term marking time. You have an account to take care of your emergencies, your expenditure. You have a card that you can spend up to 20,000 over the counter, a Visa card, and 3,005 out of an ATM. That is just short-term. That is not investment, right? Anything paying 1.something% with that TMT, TTIF, we call it, right? Not the big income fund. And all the bank funds that are running at 0.8 and 1.2 and 1.5, that is not investment. That is marking time until you find something to do with your money, right? Like I said earlier, people who don't know what to do with their money, give it to somebody at 1%, and they take it and lend it to somebody who know what to do with it. So see what side you want, right? Yeah. So
that's great.
Until you find something to do with your money. But if you're investing, you must have it invested in something that can make a profit. You take a risk to make a profit.
Right. So that would be the first scheme. What used to be called the first scheme.
Yeah. Okay.
Last but not least, because I would want to yield the floor to Wayne Wilson. I was very much intrigued by your what looks like a portfolio construction, and it's a question I have asked in different ways elsewhere, but I think you gave the clearest answer, and that is you basically start with the first scheme, and as you get braver, you look at the individual stocks now to add on top of it. But it's those individual stocks that you're talking about where you will probably have to get in at higher levels, like 10,000 and 15 and 25,000 through a stockbroker. Is that correct?
Right. And you take the stockbroker's advice, and he will show you, according to your level of risk, right? So that, once you get on top there, you pick out 3, 4, 5 of them and you go for those, So your portfolio will be made up of the base, which is in the first, the growth on income, which is secure, which you could sleep with. And on top of that, you put a 10 or 20 or 30 in the other stocks in order to make a bumper, if you can.
Right.
And if you lose, it's only a little 10, right?
Permit me one final question. The individual stocks now, what would some of your picks be?
All I have to tell you, look at the papers today. Look at the papers every Sunday, right? Every Sunday I look at it. Look at the paper every Sunday. Look at the table, right? Just look at the stock. Look at the last column to see what it did for the year so far, and you'll see what did well for the year so far. Look nearer in the middle section and see what it did this week or today, right? And you see how it's going, right? Pick some of those that have been doing well for the year so far, maybe Formels and a couple of those that have been doing so well, and get some of those. But keep your eye on the others, because there are other stocks which are very good, which are going down now, but very good companies. And they would turn. They have already started to turn. Once people hear that they really have a vaccine, things are changing. In the States, things are changing already, right? You see Pfizer stock 39 dropped down to 36, rushing and buy 36 because it would probably reach 50, right? But that's an individual stock. You take a chance, right? You see, you can take your chances on some individual stocks. Once you have your base in place, you cannot go bankrupt. Good. So put
Thank you very much. Thank you very much, Mr. Redhead. Ivan and Michelle, I yield the floor, either to Wayne or Kester Below, otherwise.
Yeah. I would like Wayne Wilson, and then after we could probably take Jason Bramble if he has any questions. This person, of course, deals in forex trading, so I think he would have one or two questions. So, Wayne?
Good night to all our Diamonds, Ivan and Michelle, my co-panelists. Mr. Redhead, a lot of my questions have been answered, but I do have one for you, sir. I, like Michelle, I'm in the banking industry. And, you know, I'm sitting here in awe because for my very short time in One Life, and especially the OneAcademy, you brought to life what I've learned over the past 2 years, and especially going through Forex. You have really not only brought the knowledge to life, but you have also brought some more perspective into what I'm going to be looking to do with my I say currency because it's not money. But I have one question. In terms of investing in a unit trust, is there a limit to what you can do weekly or daily in terms of currency invested into the unit trust?
You can put anything you want. There's no limit, right? Right. All I guess any financial institution has to pay attention to is your pattern compared to your income.
Right.
Right? Because, you know, we have to be concerned about, you know.
Yeah.
But once you have the means and you can declare your source, nobody stops you. You can put how much you want.
Okay. All right. So I yield the floor now to Jason, and thank you very much for sharing, sir. Pleasant night.
You're welcome.
Thank you, Wayne. Well, Jason said most of his questions have been answered, so there is an opportunity for anyone else. I see Muriel, Noel, or Kester is on.
Anyone?
Okay, good night, everyone.
Okay.
Muriel, you want to go ahead, Muriel?
No, you go ahead. You go ahead.
Okay, I wouldn't be long. Just in full agreement with the dear brother who came on as our guest, Mr. Redhead. The importance really of diversifying, you know, and getting involved in several portfolios to secure your wealth, to protect your wealth, you know, and to profit. Because we don't know in this world that we're living in, any type of situation can occur, right? So that is a good means to protect. I'm getting a feedback to protect our wealth, right? And also the video that was shown. I mean, this guy, you know, he did a very comprehensive job in analyzing what is going on as far as education is concerned and the disparity that exists among the 1%ers. They having the ability to invest more in their education. And this underscores exactly what we're doing here at our OneAcademy, the heart of the company, and even this platform where we can become so edifying. So I thank you, Mr. Redhead, and I thank you, Ivan and Michelle, for bringing to light this important information. Thank you.
You're welcome. Muriel?
Hi. Well, the camera, I'm not able to open my video, so
That's okay.
I will just, not me, it's the host has need to open it. Anyway, a lot really, some powerful words from Mr. Redhead, really gave us a lot of food to chew into, and I know we would probably we need to have him here again. He certainly succinctly spoke about us managing risk by identifying those 10 different areas that we need to look at investing. You know, even at the time when a few years ago when oil wasn't looking so hot, I did also some investment in that area too. And unit trust, I could attest to, and I know we're not here just to celebrate unit trust, but I could say that I have benefited from some investments I made through unit trust a long time ago, not as early as I wanted to, but the unit trust, by using both the second and first scheme, I was able to use that helped me to put my daughter through medical school by managing what I was able to do there, you know, even in terms of utilizing, having the US fund, etc. So that's important. But next discourse, we probably need to talk about what Ray spoke about. There are some things he said that we need to really debunk, but when he spoke about the issue of the monetizing of debt, the path that the governments are going along with, you know, I just wondered how that is probably going to impact on the multiplicity, or if that will net it off in terms of the type of investment that mutual funds and unit trust, etc., invest in, because of that underlying monetizing of the debt element, etc. So just a couple of those things, and you know, you spoke about cash is king at the start, and Mr. Redhead really dealt with that. And one of the issues that you always speak of is not just only that, but also the fact that the spending power of cash really diminishes, you know, and along with everything else, because of the whole QE and because of inflation, cash in your hand, the value we know depreciates, and all that we've learned because of OneAcademy. So that's just my little ramblings to tie off things, because, you know, I was on the road, so I had to get a little things here and there.
All right. Okay, thank you so much.
Thank you.
Thank you so much, Muriel. And of course, we have passed the top of the hour. We'll just let it go on for a little longer. And one of the things that you said, Miri, is really that issue of cash. And a lot of the financial people right now, those, of course, who are going diametrically opposed to the current system, they're saying that you don't save in the same currency that you spend. Mr. Redhead, do you agree with that statement? Oh, is that a statement that you will perpetuate?
Unmuted. Yes, I don't I'm not so opinionated on that. You know, you don't save in the same currency as you spend. If you are an ordinary person in Trinidad, you're dealing with Trinidad currency, and you're spending in Trinidad currency, and you're saving and investing in Trinidad currency.
Any if you're talking, of course,
if you're a little more sophisticated, then you would probably take that step. But for most ordinary people.
Well, the general thought is if you are saving in fiat currency, what is happening is that, and the same thing that Muriel said, the fiat currency goes down in value. So therefore, your savings will really be devaluated over time. So if you are saving, you should save in something other than that in order for you to hedge and really develop real wealth and not fake wealth, in the sense that as you save, the money devalues, and then when you spend it, you're spending it, of course, at a less value. So you're not doing
I think what it means, right, is that you're not saving cash. Good. It turns into assets, right? Whether building assets, whether stocks and shares, it turns into assets, right? And those are what are growing, and they are growing by dividends and profits, rents, dividends and profits, right? Not interest as such, right? And
but that
when you're ready
is
to money,
that is not saving. Saving
saving is, like I said, saving is simply spending less than you earn.
Mm-hmm.
And if, like I said, you don't know what to do with the money, you would save it in some institution and some short-term thing, and take a 1% and think you're doing something. Right? If you invest, it means that you are putting it into some asset, right? You are capitalizing, putting it into an asset, whether it is tractors and trains or or shares in Massey, which goes into buildings and groceries and all the various things they produce, or putting it into whatever company, you are investing it. You are putting it into something that is growing, that is making profit, that is employing people. That is growing your money, right? That will make much more than, if you wait to get 1%, you're obviously going to drop way behind inflation, right? But if you invest it and the value of a share goes up from $59 to $72, you're not thinking about inflation, for heaven's sake. It's profit. You're investing for profit. Good. Thank you.
Good. Thank you so much.
All right. So we want to thank you, Mr. Redhead. We believe that a second and a third or a fourth may be needed as we continue adding value to the community. We know that the advice you have given, it will be taken and people will benefit from it. I personally do, as I said before, participate and also advise people to participate in Unit Trust Corporation. I believe it's one of the best ones that I see that adds value. And I'm not bashing any other, but it's one that I like. And I believe that we will really see the benefits of it in the future with the advice that you have given. With that being said, I want to remind everyone that OneAcademy does just what Mr. Redhead said. We give the education. Most of the things he would have said is that people do not, well, not most, part of what he had said, people lack the education. OneAcademy, One Life, that's what we are about. We sell education. We try to bring the masses into the know. And we believe that we are doing this one life at a time. So with that, we want to say thank you. And we want to turn it over to our host, Dwayne Cadiz, to end.
Thank you so much, Mr. Redhead and the panelists. And we look forward to another interview.
I know that we are on a time lock, but before we turn it to Dane, I just want to remind people Friday to tune into Conversations with Alicia. There would be a very impactful session. We will be having, you just tune in. It will be impactful and you would not want to miss it by whatever means necessary.
Yes, thank you so much, Muriel.
I would like to thank you all for the opportunity and to let you know that, well, I am a salesman. My name is on every Unit Trust brochure.
Okay. We will contact you for sure.
So again, our OneAcademy manuals do speak about mutual funds, and we had to basically highlight that today, and it's part of the overall education that we give, and it shows you exactly why a mutual fund is important for you to have in your portfolio. All right, so with that, we turn it back over to Mr. Dwayne Cadiz to take us to the end. Thank you so much.
Thank you, Ivan. Thank you, Michelle. Thank you, Mr. Redhead. You indeed helped us to make this OneAcademy presentation and call this evening very abundant in terms of your knowledge base. I kept typing in the chat as you spoke, nuggets, because you were dropping a lot of nuggets for us throughout what you had to teach us this evening. And a lot of what you taught us, as Wayne said, it just seems to be coming out, flowing out of the OneAcademy. Expenditure, savings, investment, and all the other nuggets that you had to drop. So we really, really appreciate you. And we appreciate you coming out of the woodwork of our community. And there are so many like you, business professionals who understand investment, who have vision and understand that the one coin that's at the center of our ecosystem is a commodity. It's the newest commodity on the block. And of course, it will appreciate with time, and it's going to give you an option in the future when probably some of the other asset classes fail. So I want to say namaste to you. You know, the God in me recognize the God in you. Thank you for your contribution. and we want to close out this evening's call. So for those of you who are looking at the recording tonight, you had an opportunity to be here live and to put your questions or comments in the chat box to be heard or to be reviewed. And I guess you missed that opportunity. But for those of us who avail ourselves, I want to say congratulations to you. I know you're feeling much better about yourself because you understood that you made the right choice, all right, to join our network and to join our team. So from us here in the Caribbean and to you all in the global diaspora, we say one's out,
One's
one
out.
life, more life.